Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Thursday, March 25th, 2010. Well, the previous day we had a very strong bullish close up above this strong area of resistance around the 81.4 region, and the market moved all the way up through there rather significantly to close up near the 82 level of resistance. We identified that previously as an area of potential resistance for this market. So a very large green body candle, a day where the buyers closed the market in control, showed very strong commitment to taking this market higher. One worrying factor about this current candle is that the size of the body has reduced quite significantly, and that may be a cause for alarm for a potential change of trend. Although the body is still green, and the green body tells us that the buyers have continued to make bullish progress on the day between the open and the close. The reason why there is potential for a change of trend is because the buyers have failed to make the same amount of net progress that they did on the previous day. Now, just looking back at the recent history in this chart, yesterday's body size was really quite out of character with the rest of the market. So it's really an extreme day, and the size of the body of the current candle is pretty much in line with a lot of the trading that we've seen when we've had some bullish candles. So that might not be too significant, the fact that the size of the body has reduced substantially. What does look good for the bulls is that the market has actually taken out the 82 level and closed above there with a fairly bullish candle, with the market closing up towards the high. So that close up towards the high is telling us that the bulls have continued to close this market in control, and that could be significant for the market. They've also continued the commitment that they had to taking this market higher on the day, and that was determined by where the market closes in relation to the high and the low. So a close up towards the high means that the bulls were very strongly committed. Now, the long shadow on the bottom represents upside price rejection, and that shows a lack of commitment by the bears. The bears have failed to close and maintain the market down around the lows there, and the bulls came in again solidly and brought the market back up. So there is a reading in the short-term dynamics that there is potential for this market to continue to the upside. Now, with that, we also have the market up above the cloud of the Kumo, so the market is overall positive, and we would expect that the trend will continue. The market is also trading well up above the Kijun-sen and Tenkan-sen, which are both trading at 80.875, and that reflects that the market is bullish in the medium and fast-term time frame. Now, if the market does continue trading up, then we do have this zone of resistance between 82, 86, and 83.22 that the market could trade to. There isn't any significant areas of potential resistance for the market anywhere through up until this 82.66 area. So there is strong potential for the market to trade or continue to trade to the upside. Just looking at the Chiku span as well, that's this orange line here, and that's simply the current closing price shifted backwards 26 periods, and it enables us to compare it to the price action that's immediately above or below, and that actually also confirms the strength of this market, the bullish strength of this market, with it being above where the price action is at that point in time. So overall, we have another continuation to the market to the upside. Previously, we had a very strong uptrending move that took out the cloud. We had a flag pattern and a breakout to the upside, a very strong trending move following the breakout to the upside. Potential for a head and shoulders pattern reversal, which failed to be confirmed. We actually had strong areas of support down below there, and then the market has traded up through this very large, big, strong area of resistance between 81 or 80.4 81.4 and 81 and then 81.4 where we had all of this very strong selling as the market traded up through there, and the market really blew that area away very strongly yesterday. So potential for a strong continuation of the trend to the upside, and we need to watch the high of this current candle for a continuation. Certainly watch the low of the current candle for potential support if the market does come off. Potential strong support now anywhere through the 81.4 region, certainly above there as the market, if the market does approach there, and through to 81 down to 80.4. We know that areas of resistance can turn into support. There is strong potential for that to happen. Certainly we have the Kijun-sen and Tenkan-sen within this area, which may hold as support, and anywhere within the cloud just down below here. But this market is looking quite strong and should continue to appreciate.